A tricky aspect of crypto is that it can be pretty difficult to get a handle on any particular coin's true value. Everything's so speculative all the time. Is it even possible to figure out a real baseline valuation for what a coin should be worth? Well, it'd be incredibly useful to think about during bear markets when we're wondering when to pull the trigger to get max value out of a purchase. And when it comes to Vitalik coin, old Ethereum here, well, the latest earnings call from SharpLink Gaming actually gave us a pretty interesting possible way to try to value each ETH coin. Plus, it looks like SharpLink's valuation may even have been on the conservative side. We got an interesting video for you today, so let's jump in and see how it works. By the way, I own SharpLink Gaming stocks. It's not an endorsement of their stock, just mentioning that. But I do own some ETH. You can see portfolio disclosures is all down below in the comment section. Now, in case you're not following the situation with digital asset treasury companies, SharpLink, which trades under the ticker SBET, this year pivoted to becoming an ETH treasury company. So it's kind of like MicroStrategy, but for Ethereum. Tom Lee's BitMine is doing the same thing also in that stock, by the way. The team over at SharpLink, though, includes two Joes. Very important here. Consensus founder Joe Lubin and former BlackRock executive Joseph Chalem. And out of the new crop of ETH treasury firms, and there was a lot of them buying a lot of ETH, I think that was still $27 billion to deploy. Probably time to short Ethereum. Don't short it, it's crazy. $27 billion buy pressure. Anyway, it's the second biggest holder after BitMine now, or SharpLink. So they have about a 750K ETH stack. So that's who they are. On the earnings call, SharpLink used a particular metric to figure out the value of ETH, and the all-important measure is total value secured. So you might be wondering, Lark, what is total value secured anyway, man? Well, that's a great question. And most people already know TVL, which is total value locked. That's a number we refer to quite a bit in crypto when we talk about DeFi protocols or money on a particular chain. It's the number you see on DeFi dashboards at places like the website DeFi Llama. We all love llamas. DeFi Llama is a great website. The TVL shown here for Ethereum is straightforward as it measures how much crypto is actually locked up inside of Ethereum DeFi protocols. So the importance is clear. The higher the total value locked, the more money is basically on that blockchain, and the bigger the chain's presence is, and therefore the market cap probably is too. But TVL doesn't always tell you the whole story. It doesn't tell you how much actual economic value is secured by Ethereum as the base layer. That's where total value secured comes into play. It's a very interesting metric. The TVS metric is actually a lot higher than the TVL, and it shows the total economic activity that depends on Ethereum's security. Whether that's staked ETH, which is not counted as part of TVL, whether that's assets bridged onto layer 2s, which is not counted under TVL, stablecoins and RWA products issued on Ethereum, DeFi positions, it captures the whole pie. So while TVL tells you how much money is sitting inside a DeFi smart contract, which is a very interesting relevant metric still to discuss, TVS is much more relevant, it's much broader, and it captures the full scope of assets and activity that Ethereum actually secures. Now, as for why this matters, this is where we get to the fair valuation part. As for investors, TVS provides another point from which to assess Ethereum's market cap. So if Ethereum offers security for trillions in assets, then its value shouldn't just be seen as ETH token price times circulating supply, and instead, maybe we should start framing ETH as the base asset underpinning all of that on-chain secured value. And you could do a similar valuation metric with Solana or other blockchains as well, but we're doing it for Ethereum today. By the way, it's a decent way to sell it to potential investors, so SharpLink Gaming is very clever for doing this. It's a compelling narrative. So TVS is about dependence, and for Ethereum, the bigger that dependence gets, the more assets that are secured, then the stronger the case that ETH itself should be valued higher, since it's needed to hold the whole ecosystem together. So then, what is the correlation between TVS and price per coin? The $1 million question. Well, before we break that down for you, look, no matter how you value your ETH, I got news for you. You're gonna need a damn good place to store it, which is why I'd like to thank today's sponsor, TANGEM Wallets. Look at that bad boy. Isn't that beautiful? So simple too. So simple. TANGEM Wallet is an awesome wallet. They're sponsored today's videos, and for a great reason, because they're super affordable and they're super efficient at holding your assets in cold storage. You don't need to trust exchanges anymore, guys. Through crypto, with TANGEM, you control your keys. That means total freedom, military grade EAL6 Plus chip, 0 seed phrase exposure, but you can get your seed phrase if you want it. Okay, it's still available. No cables, no batteries, just this. You tap it on your phone and you're good to go. Simple card. They also have a ring if you want a ring, but they got the card option, pretty easy to carry around. TANGEM is more than just a wallet too. It's your all-in-one crypto command center, okay? Swap, stake, send, even store NFTs. And here's the deal. Like I said, these are super affordable, by the way. Click the link down below to get 10% off now to make it even more affordable and experience real self-custody made simple. Stop gambling with your long store coins. Put them in a cold storage wallet. Grab one of these. They're super cheap. Thank you very much for supporting today's sponsor. Now, let's get back into this. Look, here's where things are really interesting from a valuation point of view. As according to that SharpLink earnings call, the ETH market cap should grow by $1 for every $2 of assets secured on chain. But according to data from Token Terminal, SharpLink's estimate may actually be too conservative, as the TVS can be seen to have set the floor for ETH's fully diluted market cap at a 1-to-1 correlation. Or in other words, as Token Terminal puts it, if there is $1 trillion in assets secured on Ethereum, then the floor valuation for Ethereum would in essence be about $1 trillion market cap. You'll get variations of that at extremes of the market, but let's say it should be the fair value for ETH. Although, as you can see, the market cap often soars way above that level depending on where we are in the market due to speculation and greed and fear and all the rest of the kind of stuff, right? As is the case right now, we're above that 1-to-1 TVS level. In fact, the current market cap was the same as the current TVS. Then you'd actually arrive at a price around $2,585 for ETH. So ETH could be considered to be very overvalued based on the 1-to-1 metric. All in all, though, as long as Ethereum keeps bringing assets on chain, then its valuation should grow at a 1-to-1 correlation with the assets at a minimum. Now, if we take the other valuation into play here, maybe it looks even better. So the next question is, how much value will Ethereum secure? That's the real question. What are you planning on for the future? To get a handle on this, let's go back to that first post from G-Money, and he lays out that Ethereum currently secures 60% of all stablecoins, 83% of real-world assets, 72% of all DeFi TVL, and is 10x larger than its closest competitor. And if we bring in its layer 2s, Ethereum layer 2s are some of the most relevant blockchains in the space. Look at Base, for example. And that's all confirmed by the way, if you take a look at the RWA data, Ethereum is far and away the most dominant network. Now, others like Solana and Aptos and stuff are up and coming for sure, but ETH is the faraway winner. So this is where Metcalfe's law comes into play, which basically states that the value of a network increases in proportion to the number of users. More users, more RWAs, more stablecoins, more ETH go up. Now, Tom Lee of BitMine also recently posted in his mega bullish fashion, as you'd expect, about how Wall Street was the winner when the US came off the gold standard in 1971. And now ETH, guess what, is set to pick up the baton as the US transitions towards the tokenization of everything. The on-chain financial infrastructure future is happening right now. And if you go back to the RWA data, you can see the trend over the past 4 years. The total value of RWAs has been on a non-stop upward trajectory, and it's only going to get crazier. In fact, it's projected to hit 30 trillion by 2030, surging especially strongly, of course, this year as a pro-crypto U.S. administration came in. So that's it now, including stablecoins approaching the $300 billion level. And where does this go in the future? Well, you're not bullish enough on stablecoin adoption, my friends. Scott Bessent, the current Treasury Secretary, this year projected that the U.S. stablecoin market, yeah, the Treasury Secretary is talking about the stablecoin market now, by the way. This is where we are. Okay, have you figured it out yet? Holy shit. Anyway, he said it could be worth $2 trillion by the end of 2028. So let's say Ethereum captures half of that value, and you've got, according to the TVS correlation, $1 trillion floor on the Ethereum market cap. But it's not going to be just stablecoins. What else is going to be there? We're going to have RWAs in as well. Billions and trillions in RWAs. Now, even if we just take stablecoins, that's double where the market cap is today. So that implies like what, an $8,000 Ethereum as a new floor in a few years. Keep in mind, that's only taking into account the stablecoins market and its floor value for just 3 years from now. For sure, whatever happens from here, there will likely be tremendous volatility along the way. But everything right now points towards tokenization going way, way, way higher, okay? And Ethereum is positioned right at the center of that shift to capture a big portion of the market share. It won't capture all of it. Solana is going to capture a lot of it. Ethereum layer 2s will also capture some of it, which will benefit Ethereum, obviously. Others like Avalanche, they'll have their little piece of market share. Somebody might even do something on Cardano one day. Crazy stuff, I know. Anyway, that is how we can potentially value a future price for Ethereum. Long story short, the TLDR, the price is going to go way higher as more assets get issued on the chain. And there's going to be a lot of assets issued on the chain. Thanks for watching.